It's not an investment for sure, and it's not a stable currency for sure. Chart the volatility of Bitcoin and then smile at me with a serious face and tell me this is a solid investment, and I'll tell you you're smoking crack.
I will chart the price of Bitcoin volatility in logarithmic scale to make sure we capture all the volatility. Dave Ramsey is a boomer, multi-centimillionaire finance educator, one of the most prolific in the entire world, especially in the Christian and American circles of the planet. Dave is famous or infamous for cutting up credit cards, for encouraging people to become debt-free, to save and invest for the long term. However, one long-term investment, quote unquote, which we'll get into in just a moment, Bitcoin, is something that Dave Ramsey does not like. He's been very vocal anti-Bitcoin for years. In fact, I think over a decade now, Dave Ramsey has been shouting against Bitcoin, encouraging people to not buy Bitcoin. In today's video, we're going to have a quasi form of a debate discussing Dave's current opinions on Bitcoin. Some people argue that Dave Ramsey has changed his mind on Bitcoin or that he's starting to soften up into Bitcoin. I don't necessarily think that's the case. I think Dave has actually been very consistent in his opinions of why he does not like Bitcoin. And that is why I'm making today's video. Today is not about bashing Dave Ramsey or saying that he's an idiot or a fool or this or that, the other. Today's video is about addressing his very valid concerns with people's enthusiasm and exuberance when it comes to short-term speculations, trades, and nonsensical things. Ultimately, the goal here is not to make Dave Ramsey look like an idiot or anyone watching this video that happens to agree with some things Dave says. The goal is not to make anybody feel bad about themselves. The goal here is to identify and be precise in speech of why Bitcoin is, in my opinion, not what Dave Ramsey is saying. In my opinion, Bitcoin is something that everybody should be paying attention to, especially the people like Dave Ramsey himself, people that have a long-term horizon, people that are saving money for their future generations, people that are not trying to get rich quick. These are the kinds of people that should be focused in saving in Bitcoin. And myself as a Christian, likewise Dave Ramsey as a Christian, I think it's really important that in particular Christians begin to understand Bitcoin. So if you're somebody watching this and you're already in the brainwashed Bitcoin cult like myself, then you're probably going to agree with a lot of the things I'm going to say in this video. And maybe you either know somebody that doesn't agree with the things I'm about to say in this video, or maybe you know somebody that is a big Dave Ramsey fan, and this video might be of use to you. So no matter if you're somebody that has preconceived views on what Bitcoin is or isn't, or if you're somebody that's just trying to figure out where the truth lies, hopefully today's video is going to be useful to you. So again, first of all, this video is nothing personal against Dave or the people that follow Dave Ramsey's advice, right? In all the videos I try to do, I try to attack the ideas and the disagreements, not the character or individuals of people that have opinions I don't agree with. And I think that Dave is very good about, in this video clip that we'll be looking at, I think he's very good about doing that as well. The second thing I would like to acknowledge here is that I can steelman Dave Ramsey's positions and his opinions. And this is really important no matter what topic you're disagreeing on, right? And this is my main critique, and disagreement with Dave's disapproval of Bitcoin. That is my main concern. I genuinely don't think Dave Ramsey can steelman the argument of the long-term Bitcoin savers. I do think he can steelman the argument of the TikTok brain influencers that are trading or doing all the crypto coins or trying to get rich quick. I do think he can steelman that very well. And as he correctly points out, that is a very high-risk thing that most people, if not all people, should not attempt to do. I think he can steelman that. However, I do not think he can steelman the arguments I'm about to lay out, right? I don't think he can do that. Now, I'm somebody that many years ago, about a decade ago, I did take the Dave Ramsey course, right? This is the very beginning of my financial journey, well over, when I was a mid-teenager, right? I was big into the good growth stock mutual funds, trying to get 11 or 12% a year, and I actually did manage to do that for, I think, 3 or 4 years in a row, right? Obviously now, I've taken a bit of a pivot. I have over $1 million of debt, and I am acquiring Bitcoin relentlessly. My entire net worth is in real estate, Bitcoin. I used to have physical gold, however, I have sold that. Some individual stocks and cash. Of course, most of those things Dave Ramsey does not approve of, other than the cash. And even the cash himself, he admits, is not a investment. So all I have to say is that, no matter what you think about what I'm about to say in this video, I can say I have been on both sides of this argument. A decade ago or so, I fully agreed with Dave Ramsey, and I thought, hey, worst case, Bitcoin's a scam. Best case, it's a speculation, but I don't want to speculate. I'd rather stick with my good, solid growth stock mutual funds, just like how the Dave Ramsey camp describes. lives. And I think there's a lot of truth to what Dave Ramsey says in his 7-step baby step program. And I think that's why this is a really useful discussion / debate / exploration of different viewpoints when it comes to Bitcoin. But like I said, in full transparency, I do have my own bias. I am a mega Bitcoin maxi bull with 7 figures of debt and buying as much as I can for as long as I can. I've sold shares for Bitcoin. I've slept in my car for Bitcoin. I've borrowed money to buy Bitcoin. I've done all kinds of things for the sake of acquiring Bitcoin. And yet, ironically, I genuinely believe I'm in a lower risk position now than when I was 10 years ago, when my net worth was, a couple orders of magnitude smaller, and I was, in good growth stock mutual funds, right? I'm not saying those things to say, oh, you should ignore Dave and listen to me because I'm out on the, high risk end of the curve. I'm saying everything I'm about to say in this video because I genuinely care about people, and I genuinely believe that Bitcoin, not mutual funds, Bitcoin is the new lowest risk investment, or savings is the better word. Again, we'll get into those semantics later. I believe Bitcoin's a better savings vehicle than good growth stock mutual funds. And if you're somebody that is a fan of Dave Ramsey, take what I just said, and that should really perk your ears. Hey, this person that used to agree with me has now changed his opinion and put his money on this, put his money where his mouth is, to the degree saying something that's so counterintuitive to the entire premise of the assumption. The entire premise of Dave Ramsey's arguments against Bitcoin is on the assumption that everybody's on the same page, that Bitcoin's higher in the risk end of the curve. I do not agree with that presumption. We'll get into more just a while. So again, finally, this video is to be of use to you. No matter what your financial persuasion is, whatever your current opinions are, hopefully this video today is going to be of use. So without further ado, let's listen to the first part of this clip of what Dave Ramsey says, and I will respond what I agree with, what I don't agree with, and what I would add to his commentary.
Today's question comes from Chris in Florida. He says, you used to be hardline against crypto, but in the last couple of months, you've said that if you want to spend your fun money on crypto, go ahead, but it's speculation. Have you softened your stance on crypto? What would it take for you to see crypto as legitimate as any other currency, as legitimate? Dave, have you gone soft on us?
Well, let's start with the basics, okay? There is no currency, regardless of how legitimate, that is a valid investment. You should not buy the Chinese yen as an investment because your golfing buddy said it was a good idea, or some idiot on TikTok. You should not buy the US dollar or the euro and speculate on currency values. That's what Bitcoin is. If it's having a good day, that's what Bitcoin is. Okay? It is not a place to invest. If you want to speculate in commodities like gold or silver or wheat futures or whatever future, that's what currency is. You're speculating. You're gambling. Then that's up to you. But don't call it an investment, and no, I haven't gone soft. Anyone who does that, I think, is wasting money. Speculating in commodities, I do zero of. Gambling in Las Vegas, I do zero of. My daughter Rachel, on the other hand, has been known to be at the craps table in Vegas. But
I largely agree with most of the statements that he said. And again, this is why I think this discussion is useful, because Dave has a lot of really good points. And Dave is correct. I fully agree that one should not be investing in currencies, in particular political currencies. What are political currencies? That just means the broad bucket of all the different kinds of currencies that are secured and verified and worth anything because they're tied to an authority or a political institution, right? The yen is tied to a political institution. The dollar is tied to a political institution. Holding dollars is, in effect, an investment in the future of the American military-industrial complex's ability to secure global power, right? You hold Chinese yen or Chinese yuan if you're in those respective current countries, right? Germany, Turkey, China, Japan, wherever, right? You hold the local currency because you're living within that political jurisdiction. That's why political currencies are important. So they have a use. Yes, absolutely. And I also agree with Dave that the use of these political currencies is not for investment. Why? Because the definition of an investment is something that you are allocating capital to for the concept of increasing the capital return to you, right? You don't hold dollars for the sake of getting more dollars, right? You deploy those dollars in something that are going to yield you a larger amount of dollars. So I definitely agree with his perspective there, right? Because you invest in something to get more of a return denominated in that given currency, right? You don't invest in the dollar. The dollar has use. people use the dollar, right? Billions of people use the dollar literally every single day, right? So just because something's not an investment does not mean it's without use, right? We're on the same page about that. And it's correct, and Dave's correct. You do not invest in political currency, right? That's not a good idea, because if you're betting on the trade between, the yen and the dollar or whatever, you're betting on the decisions of two different political jurisdictions, which, as we all know, it's not very easy to predict what politicians are going to do, especially predicting simultaneously the actions of two different sets of politicians in two separate countries and jurisdictions, where each one of those, it's so improbable that you're going to consistently, get more money over time. That's why most people lose. It is not a good idea. You should be focused on long-term wealth preservation and planning, not on gambling what the fluctuations of dynamics between two given political jurisdictions is going to be. I fully agree with that. However, I have a very strong disagreement. Dave's distinction between investing and speculating, I think, is one of the core principles of what he gets wrong throughout this entire clip that we'll see over the duration of this video, right? The distinction between are you investing or are you speculating has much more to do with the habit, the action, and the mindset than the asset itself. You can invest in wheat, or you can speculate in the S&P 500, right? Dave's commentary in the clip that we just watched is basically saying holding political currencies is inherently speculating, and he's also implying, in effect, that holding good growth stock mutual funds, which are his favorite thing, right, or the S&P 500, whatever you want to call it, that is investing. And I just firmly and do not agree with that mindset. Many people that buy good growth stock mutual funds or the S&P 500 are speculating on the short-term moves of that market. And a lot of people that invest in other things, invest in various things, they are holding for the long term. It is much more wise to hold oil, gold, or wheat for the very long term as a commodity, investing for the future. That is a much more wise thing to do than to gamble and speculate on the short-term actions of price movement of something, right? You can have your debate about is holding wheat or holding the S&P 500 a better asset to hold over a long duration of time. You can have that debate, but that debate is entirely separate from the question of are you investing or speculating. It has everything to do with the action of the investor and nothing to do with the thing you are acquiring. Now, of course, some things inherently are speculations because they inherently have a short-term duration, right? Like various kinds of options contracts, various kinds of other things, inherently are a short-term thing. So those things obviously inherently are speculation, but they're only inherently speculation because the time horizon and the things you're betting upon are things outside of your control in short durations of time, right? If you don't believe me, you can look this up, right? Go to your favorite search engine or AI bot, whatever you want, and it will very well describe the distinction and difference between investing and speculating. Investing and speculation are two distinct approaches, right? Notice the word is approaches, not buckets of asset classes. They're two different mindsets, two different approaches to participating in financial markets, any financial market, not just your favorite financial market, right? Each of these methods, investing and speculating, have different goals, time horizons, like I was just saying, and risk tolerance. Investing, what is the focus? Long-term growth and wealth creation. What is the time horizon? Measured in years or even decades. What is the risk tolerance? Investing, generally lower risk than speculation. Decision-making, it gives examples, right? This is, I didn't type this up. You can look it up anywhere online, right? Speculation, another example. The focus, short-term profits, trying to flip, right? Time horizon, risk tolerance, decision-making, right? The point is that just because something is not an investment does not mean it is without worth. We have already established by Dave's own admission that political currencies, and in particular the US dollar, is not an investment, and yet it still has worth, right? I am drinking water right now. That water has worth. It's not an investment. I'm not buying water for the sake of getting more dollars in the future. This is consumption, right? Something can still have value without being an investment. So we'll get to Bitcoin in just a moment. But using Dave Ramsey's examples of real estate, right? One does not say, oh, you are speculating inherently because you're buying real estate. It has nothing to do with the real estate. It has everything to do with how you're treating the real estate. Are you, like Dave Ramsey many decades ago, are you flipping short-term rentals on 90-day loans with, these all kinds of balloon payments? That's a speculation. That's not wise. However, Dave today, he buys large multifamily and commercial buildings in cash, pays in cash, and holds it for the very long term. That is investing. You do not identify somebody as an investor or speculator depending on if they bought real estate or not, if they bought the S&P 500 or not, or if they bought even Bitcoin or not, right? categorize them as a speculator or investor depending on how they view that given asset. And this is unfortunate that Dave starts his criticism of Bitcoin with this very, I would say, grave misunderstanding or misidentification of what identifies speculation versus investment, right? The things I would add is that a quote Dave at the area in that clip said was that speculating in commodities, I do zero of. Gambling in Las Vegas, I do zero of. Me too, right? And so my point is the whole premise of Dave's critique of Bitcoin is on the assumption that everybody holding Bitcoin for the long term is inherently speculating. And I just flat out disagree with that premise. We'll get into more why in just a moment, but I encourage you to reflect on this with the same mindset. Investing in speculation is an action, not inherent of the asset itself, unless that asset has an expiry date like some sort of options contract or something. I agree with Dave. I do zero speculating in commodities, including Bitcoin. And Bitcoin is a commodity. It is not an investment. It is a commodity. We'll get to that more in just a moment when Dave talks about it. But likewise, gambling in Las Vegas, I do zero of. I literally have never bought a lottery ticket because I can't justify the cost. Yes, this is the guy that's borrowed $1 million to buy various kinds of assets, most in particular Bitcoin, right? So yes, even me, that is this high-risk kind of guy from the viewpoint of the Dave Ramsey fanboys, even I am in full agreement. I would never buy $100 of futures on some soybean commodities, right? I would never do that because I would rather save that $100 for the future in something that I believe is actually going to be worth something in the future, right? And I would never gamble. I was in Las Vegas a few months ago, and I did not gamble when I was there. I had no desire to. In fact, I think it's pretty gross. You know, you're smoking, inhaling all this cigarette junk, and there's, half-naked women everywhere, and you're putting money in these machines that are ripping you off, and it's gross. It's not my thing, right? Some people it is. I don't think that's fun. So anyway, all I have to say is that actually there's a lot less difference, I think, between a lot of the Bitcoin long-term savers and holders versus a lot of the Dave Ramsey folks. So that'd be my first commentary of what Dave, just from the get-go, already is incorrectly talking about when distinguishing between the actions of speculating and investing.
So I don't know.
That's always been your stance. I think just as it comes up more, we always go, hey, we're not mad at it. We're not going to yell at you for doing it, but realize what you're doing is speculating and don't make it a big portion of your world or your net worth or your investment strategy.
The problem comes in when you substitute the word invest. That tells me you put a large portion of your life into this, and you're getting ready to screw up your whole freaking life because you're an idiot. That's where your problem comes in. Okay? So no, I haven't softened on that at all. Now, what does it take for me to call Bitcoin a legitimate currency? It needs a longer track record that is stable.
What does Bitcoin need in Dave Ramsey's eyes to become something that is worthy of a portfolio allocation in people's long-term savings, right? What Dave says is a long track record of stability. That's what Dave Ramsey says. His first thing, it has to be stable, and the second thing, it has to have a long track record. And on the surface, this makes complete sense. It's like, okay, Luke, why are you getting into all these semantics about saving versus investing, right? Like, of course it's objective. Bitcoin doesn't have a long track record. Of course, Bitcoin's not stable, right? Have you seen the price of Bitcoin over time? Have you seen how volatile it is and blah, 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 blah? That's what most people say, right? So just making sure on the same page, steel manning Dave Ramsey's argument, that's what he would say. Long track record and stable. Okay, let's discuss these two things. Here's my question. Define what stability is, right? Define what is stable. The US dollar is much more stable than good growth stock mutual funds. And yet, Dave, you're saving your long-term purchasing power in terms of good growth stock mutual funds instead of political currency. Well, stability is all relative, right? Like stability is all relative, right? In terms of the stock market, the dollar has been trending down basically indefinitely, right? In terms of the dollar, the stock market has been trending up basically indefinitely, right? So stability is not the main indicator when trying to determine what is the worthy thing to preserve your purchasing power within, right? So the stability in exchange rate is not what matters. The stability in ownership of the network is what matters. And Dave does not define what he means by stable here. And this is, I think, a key distinction, right? You save in the stock market for your long-term future. You invest in the stock market in the long-term future. Invest, again, meaning long-term mindset, and also meaning you're expecting more dollars in the future than the present. You invest in the stock market because the issuance of new shares onto the market is more predictable and stable than the new issuance of political currency. If the US government promised to literally never print another US dollar while at the same time giving every CEO of every company in the S&P 500 the ability to just print shares as much as they want, we won't check, you would begin saving your you begin saving your energy in US dollars, not in the stock market. So it's a common misconception that people look at the Bitcoin price and they say, look at how volatile Bitcoin is in terms of dollars. That means it's unstable. But again, that is a mischaracterization of what you actually want when you're seeking stability. You don't care about the stability of your asset in terms of dollars. Bonds are more stable than good growth stock mutual funds in terms of dollars. That doesn't mean that the bonds are more worthwhile investing in than the stocks. Why? Because the stocks are more predictable. The mutual funds, the S&P 500, right, America's corporate sector, dilutes their shareholders more slowly than the bond market or than the American political currency system does. Everything is an exchange rate in terms of something else, right? For the same reason Dave Ramsey was correctly pointing out that you don't want to be speculating between different kinds of political currencies because you have to predict two different things at once, right? You don't want to gamble between the Turkish currency and the Chinese currency because you don't know anything about either of those countries. You've probably never been to either of them, and you're trying to predict two independent systems in relation to each other. Good luck, right? The same thing is true with trying to speculate and predict between tin prices and uranium prices. It's like you're trying to predict two different things, two entirely different markets. Good luck timing that trade correctly. That's speculation. That's not a good idea. But everything has an exchange rate in terms of something else. And some things have an exchange rate that trends in one direction that is so consistent, that asset is worth saving in, right? Between tin and uranium, I have no freaking clue what it's going to do over the next 6 months, right? Between the Turkish and Chinese currencies, I have no freaking clue what they're going to do in the next 6 months. But I can tell you that probably over a long time frame, the US dollar will trend down in terms of the US stock market forever. And likewise, the US stock market will trend up forever in terms of dollars. Everything is an exchange rate and everything is relative because you can be in any given position in the world looking somewhere else in the world. You could be sitting in the US stock market watching the dollar fall in value, or you could be sitting in dollars watching the stock market grow in value. It all depends on your perspective. For the exact same reason why it is unwise to gamble and speculate because everything is relative is the exact same reason why Dave's vague word of Bitcoin needs to be stable is, again, missing the whole point. You don't care about if Bitcoin is stable or not stable in terms of dollars. That was never the point. The thing you've always been pursuing is stability in issuance of shares or percentages of the network. So the US dollar has a long track record, yes, but it's not stable in its currency dilution and debasement, right? It has a long track record and it's stable in terms of other political currencies because relative to them, since nothing is objective, it's all relative, priced in terms of something else. Sure, the dollar in terms of the Japanese and the Turkish and the Venezuelan currencies is much more stable in terms of them. However, from the perspective of those in Venezuela, the dollar looks really volatile because if you're pricing your world in Venezuelan bolivars, or 1 bolivar equals 1 bolivar, the dollar looks like it's skyrocketing in price. And so would it be wise for the Dave Ramsey of Venezuela to say, oh, well, the dollar's a speculation because the dollar's too volatile. I need to see the dollar have more stability in terms of the bolivar to be able to justify it. It's like, no, that's not logical because you don't care about the stability of one system priced in terms of another system. You care about the inherent stability of issuance of tokens in that system itself. It's not logical to throw out the dollar because it's more volatile in terms of the bolivar, just like how it's silly to throw out the U.S. stock market because it's more volatile in terms of dollars. And I'm going to make the point that you cannot reject Bitcoin on the premise alone that it's volatile in terms of dollars. You can reject it for other reasons, which we'll talk about more in a moment, but his whole premise here of saying Bitcoin's not stable is just not the accurate way of rejecting the concept of Bitcoin because everything is an exchange rate in terms of something else. And so the question here is, what is the more stable system? I would argue that Bitcoin is a far more stable system than that of the US dollar in terms of currency issuance. Why? Because I can tell you exactly to the month, out 100 years from now, out over a century from now, I can correctly tell you how many Bitcoin there will be. And if you don't believe me, it's just because you haven't done the research on how that works, right? You can do research on the gold market and then be able to predict with some error bars how much gold there will be 10 years from now. You can do research on the S&P 500, and you can predict how many shares there'll be in the future. You can do research on the US dollar. Likewise, you can do research on Bitcoin. And if you do any amount of minimal research on Bitcoin, you will see that very quickly, we literally do not know how to print more Bitcoin into existence and effectively steal from others. If you don't believe me, Bitcoin's open source and anybody can just go out there, click a couple keys on a keyboard and steal a couple $1 trillion. Nobody's done it in over a decade and a half, and nobody is going to because it can't be done. So once you understand that Bitcoin is actually more stable in terms of the US dollar when you're looking at it from the correct lens being stability and predictability in the issuance of tokens, you realize, oh my goodness, not only is Bitcoin more stable than the US dollar because it's more predictable in its future issuance, but also it is more stable than the S&P 500 itself. And again, we'll get into that more in just a moment. But again, Dave here is saying that Bitcoin needs a long track record and stability, but he's not identifying what kind of stability he needs. And the stability he is inferring is frankly misleading. I don't think intentionally, but people hear that and it makes sense, but they aren't actually looking at first principles and saying, oh, well, Dave doesn't like stability when outperforming the dollar, when it's Bitcoin's as volatile as, but he does like it in terms of stocks. So it has nothing to do with the volatility of the price. It has everything to do with the volatility of the issuance schedule of shares of the network.
Okay. Let's go to an example. Okay. I have some money on my shelf that a friend of mine, the Special Forces, brought back to me that has the picture of Saddam Hussein on it. It was Iraqi money in the former regime that we went in and took out. Special Forces guy cleans out a room. There's a bunch of stacks of money that's basically worthless colored paper now, right? Because that regime is gone. Now there's a whole new government in Iraq, right? There is a currency in Iraq today. I don't even know what it's called. The chances of me telling you to put money in an unstable, new, unproven currency in Iraq is zero. Because you're putting money in an unpredictable environment that has no track record. That's dumb. That's Bitcoin. Okay? It's only Bitcoin is cool.
Well, it just has better marketing. The
cool.
hype has really worked.
Well, it's cool. And it's what we talk about on TikTok. They don't talk about Iraqi dinar on TikTok, right? Or whatever it's called. That's what the old one was called. They probably call them the new one.
No, you're right. It's still that.
Okay. So anyway, yeah, it's the non-Saddam Hussein Iraqi dinar, right? And so I've got some Confederate money that from the states of the South during the Civil War. Worthless. Okay? So if a new country pops up somewhere and they have a new currency, it's the same thing as Bitcoin.
Again, Dave says some things here that I really agree with, and some other things that unfortunately I simply don't agree with. Let's talk about the things we agree with. I agree. You can kind of think of Bitcoin like it's its own country, right? Dave didn't say this directly, but he did imply it, right? I think you can think of the Bitcoin network like a form of a decentralized digital country. And so Dave makes the comparison of Bitcoin as a currency, quote unquote, compared to that of the Iranian currency, the Confederate currency, or other currencies are implied. So, I don't think he's trying to compare it to a country there. I think he's trying to say that it's similar in other ways I don't agree with, but I actually do think it's pretty accurate to be thinking of the Bitcoin network as if it is its own country, right? And the reason why, as a quick side note, the reason why it's really important you understand Bitcoin, in my opinion, is that artificial intelligence is coming, software is coming, automation is coming, and it's going to eat the world. It is going to be harder and harder for human beings to continue to monetize and preserve their human labor. In the same way that all farmers became irrelevant, or at least 97% of them, which is effectively all of them, right? In the same way that almost all farmers became economically irrelevant at the advent of the Industrial Revolution, and the same way that the horses became economically unviable due to the mass automation of transportation via the automobile, right? It's just going to be the same thing with people, right? And this is why it's really important that you subscribe and that you like this video and that you comment down below and that you share this video with your fellow Dave Ramsey or whomever they are fanboys, because we got to get this message out there. AI is coming, automation is coming, and all these new forms of technology are going to be on a Bitcoin standard. Artificial intelligence, it's not going to be using the S&P 500 as its medium of exchange. It's not going to be using gold as its medium of exchange. It's not going to be using radium. It's not going to be using tin. AI is going to be using the thing that is the most difficult for AI to produce more of. And guess what? AI and its automation and more technological productivity of the very companies in the S&P 500, it's going to produce more wealth for more people, and that's great. But what is the one thing we do not know how AI can make more of? It is Bitcoin. right? This is, again, a technical conversation for another time, but once you do the research and understand Bitcoin, instead of just listening to a 5-minute clip about Dave Ramsey saying why he doesn't like it, when you actually do the research and understand, you understand that it's going to be way more difficult for AI to make more Bitcoin than it is for it to make more gold, more houses, drill for more oil, more renewable energies, or even more equities and shares in the stock market, right? That's why it's important you subscribe, you get this content engaging with the YouTube algorithm, and you get this message out there. This is not about, oh, Luke's trying to pump his Bitcoin bags, trying to dupe people into some, Bitcoin trading course. No, it's nothing to do with that. It's everything to do with being pro-human. And like Dave Ramsey, being a Christian, I believe that people are made in the image of God, and I want to see the image bearers of God have a larger share of the network, not the bots, the lawyers, and the government officials of the future from now. So anyway, side rant over. Let's get back to the things I agree with. I agree with Dave Ramsey that a long track record of stability is a good indicator of something, likely a well-designed engineering system. The dollar is objectively a better form of currency than the Turkish currency because America as a political empire is a more well-engineered system, right? The stock market of the United States of America, it generally goes up because that's a symptom of being a better stock market than the Indian stock market or the Venezuelan stock market or whatever, right? When you have a better engineering system, it goes farther in terms of something else. Now, that's not universally true, right? The Titanic could have gone a lot farther of a distance than the lifeboats, right? But if the system becomes destroyed or it becomes corrupted, then you should go with the better engineering system. So yes, sure, in general, 98% of the time, you can look at the big steel ship sailing across the northern Atlantic Ocean, and you can say, that thing's probably a better bet than the lifeboat because it has a longer track record, but you can't say that universally. So I agree with Dave that in principle, you don't want to be going in the route of things that are unpredictable. I agree. Unpredictability is bad because you want to be able to predict the future accurately to make proper decisions and investments and savings because you don't want to be speculating on short-term unpredictability. You want to be investing and saving in long-term wealth preservation. However, I strongly disagree with his assumption that Bitcoin is unpredictable, right? Bitcoin is predictable. And this is, again, the main concern here I have with Dave Ramsey's positions. He says things that are objectively true. You should not be speculating. You should be investing. But then he goes and says that Bitcoin is inherently this short-term speculation thing that's super high risk because it's volatile in terms of dollars, things that just aren't true, right? The only way to determine genuinely at the foundational base layer, the only way to determine if something is stable or well designed as an engineering system is his statement is that the only way to determine if something is a solid long-term bet or not is to look at the track record so far. Again, you could be looking at the Titanic over the last 4 days and the lifeboat in the water for only the last 4 minutes. You could say, well, the long-term track record history of the Titanic is sustainably, blah, 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 more than the lifeboat. I'm not going to bet on the lifeboat. I'm going to wait, right? You could say the same thing about the Dutch stock market, right? And the Dutch bond market, right? About 400, 350 years ago, and New Amsterdam, back when Amsterdam and the Dutch Empire was the empire of the world, way before America's dominance, way before the American Revolution, even way before the British had their heyday, right? You could look at that 300-year history of the Dutch continuously making their payments to their bondholders, but then all of a sudden, with the stroke of a pen, half their bonds lost value, right? So you can go on literally centuries worth of track record, but when you open the hood and you actually understand the system that's going on, that's the only way to verify if that long track record will continue into the future. So yes, I agree with Dave Ramsey. Most people, and frankly, most people listening into his show should probably only be buying the things that have a long-term track record because most people aren't going to want to look under the hood and evaluate if something works or not, right? When you go out and you buy a new car, generally you buy the car with the longest track record with, a good number of miles. It has good reputations and reviews, right? Why? Because you're not a mechanic. You don't want to look at that engine. You don't want to actually look at the first principles, understanding to see if this car is going to continue to work for me, right? So because you don't have that expertise and that specialization in being a mechanic, you just default to what the herd is doing because 95% chance that the herd is right in this case. And this car is going to be better than this other car that, some person has just made, right? But again, while you're probably right, you're not sure you're right. And this is my main concern here. Yes, 98% of the time, if you're going to be investing in something or saving in something that has a shorter track record than the U.S. stock market, yeah, sure, 98% of the time, you're absolutely right. But what about that 2% chance? You should always be aware of that 2% chance because that risk is just as large. Sure, sailing on the Titanic and jumping off the ship and the first few days of its maiden voyage, sure, that's a bad plan. 98% of the time you jumped off the Titanic, it was a bad idea and you died, right? But that 2% chance that lifeboat actually is the better bet at helping you, stay alive, right? You gotta also be aware of those moments. They're way less frequent, but they're also very important. Here's another example from an engineering perspective. The way, again, you know for sure is not by going with the herd to get a 95% chance of knowing. The way you know for sure 100% is by opening up the hood and looking at actually what's going on. Just because an airplane was brand new in the early 20th century didn't mean it was an engineering system that didn't work in the moment, right? Once you see the design take flight, you can tell immediately, despite a short track record, that it works. Let's take Dave Ramsey's example of the Confederate dollar, right? Let's say, for example, that both the United States and the Confederate States of America at the end of the Civil War destroyed both of their currencies and they both reset. Which would you bet on? Oh, well, I'm not going to, I'm going to bet on this one or that one because there's a shorter time duration, right? That's not logical, right? If you have the United States of America, you have the Confederate States of America, you're at the very end of the Civil War, you can see obviously that the Confederates are going to lose. Let's say the Confederates made their brand new currency in 1861 at the beginning of the war. Let's say that the Union, the northern states, reset their currency at the very end of the war. You would still go with that Union currency because, sure, the Confederate currency has 4 years of track record above the currency of the Union, but the Union's obviously going to win. They've got 30 times the manufacturing, like 3 times the soldiers, right? The Confederacy is split in half. They just lost Vicksburg and Gettysburg, right? Lee is in retreat. I mean, they're not going to win, right? I mean, come on, right? You don't go based only on track record if you're actually looking from a first principles perspective, trying to figure out how this works, right? And the things I would add, and it's really important, you can tell that Bitcoin is a stable monetary system. Bitcoin is the lifeboat to the Titanic. That is the American bond market and the political currencies of the world, right? You can tell Bitcoin is that because, number one, you can verify there are not human beings manipulating the supply of currency, right? Anybody can look at the Bitcoin network and verify that new Bitcoins are only created as a result of spending electricity and burning that electricity in exchange, getting a new share of the network. And you can verify over time that it gets more and more difficult. You have to spend more and more electricity to get the same amount of a new share of the network back. And so you know that it does not matter who Satoshi Nakamoto is. It does not matter who Luke Broyles is. It does not matter who any of the people in Bitcoin are. You can verify because of cryptography, because of math, and some basic due diligence and research of understanding how Bitcoin works. You can verify that every single month, every single year, in general, on average, with a long-term time horizon, that the difficulty of creating new Bitcoins in terms of spending electricity, that difficulty is going to go up. You can verify these things. And so that is how you know that Bitcoin is more predictable as a system. Bitcoin is much more that lifeboat compared to the Titanic of the US dollar. Bitcoin is much more like that airplane compared to everything else. Because yes, sure, you can just look at the track record and see, okay, well, it's survived 16 years. It's $1 trillion pile of money sitting open source on the internet that anybody with the sufficient knowledge could just steal, right? So sure, you can look at it and yeah, you're probably right, But once you actually look at it under the hood and you understand how it works, then you understand why it's survived so far to date and why it's going to survive in the future. But if you're somebody that doesn't want to understand how Bitcoin works, that's totally fine. I default to Dave Ramsey's position, which is go with the herd, just look at the basics of it and make a conclusion. Bitcoin, open source, multi-trillion-dollar pile of money sitting there. Nobody's stolen it yet. Even if you don't intuitively understand why nobody can hack Bitcoin and Bitcoin is predictable in its future currency issuance, you can just take my word for it because the money's sitting right there. Believe me, if I knew how to steal $2.5 trillion from exploiting a bug in code, I would do it. And probably every single person watching this video would do the same because Bitcoin would deserve to have that happen if that was the case. So that's the first thing, is that you can verify that Bitcoin is luck-based and cost-based and work-based, not authority-based or political-based like a political currency, right? The second thing that's really important for me to add here is that the volatility of currency issuance is less and the stability of ownership of your share of the Bitcoin network is greater than the US dollar. So sure, you could say that Bitcoin is unpredictable, blah, 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 because you're looking at Bitcoin in terms of US dollars. However, actually, I would argue Bitcoin is much more predictable, right? Sure, when you look at the price chart of the dollar and the price chart of Bitcoin, sure, Bitcoin's a way shorter price chart than that of the dollar, but how many years consecutively have we been able to predict the supply issuance of US dollars? 0. Bitcoin has a 16-year track record. So if we're looking of a track record of which one's been alive longer, well, of course the dollar, obviously. I'm not going to debate that, right? But if you're going to look at from the different framing of the question being which currency has survived longer as an audible, verifiable currency network that has been able to survive despite attacks, well, obviously Bitcoin, right? Bitcoin survives an audit every 10 minutes. The Federal Reserve hasn't survived an audit in over 100 years. Just because the latter has a 100-year track record and the former has a decade-and-a-half track record, it does not inherently mean that the dollar is a better system. So sure, you could say that the track record of the dollar is longer, but the Bitcoin has a 16-year head start of a successful track record compared to the dollar. So even by Dave's own worldview, that you look at something not based upon first principles of actually the system works or not, but you look at it based upon how well has it been surviving well, obviously the answer is Bitcoin, right? And you know that's the case because there have been millions of copycats, attacks, and threats against Bitcoin over the last decade and a half, right? Many people trying to dilute more Bitcoins, exploit bugs, and push through all kinds of Bitcoin improvement proposals that weren't actually that great, right? We had hard forks, soft forks, all kinds of other things that were direct, indirect attacks of varying kinds of degrees, from a guy sitting in his computer to entire, forms and, mega billion-dollar or multi-million-dollar propaganda campaigns against Bitcoin, right? All kinds of attacks from all range and walks of life in history, right? But none of these attacks have yet usurped Bitcoin. Again, if you want to understand why that happens, I highly encourage you to learn more about the first principles of why Bitcoin actually works. Open the hood of this car and understand why. But for the sake of keeping this video as short as I can possibly keep it, again, just look at the car, keep the hood closed, and say, nobody's done it yet, so it's probably really difficult to do. But the point is that the US dollar, sure, has a longer history of existing than Bitcoin. However, if you're looking at it from how many years has the dollar been a stable currency, where owning 1% today is equivalent to owning 1% tomorrow, it has a much shorter track record than Bitcoin. And more importantly, the dollar has had way fewer attacks against it than the Bitcoin network has, right? If Bitcoin has survived every single attack has been thrown against it, the dollar hasn't had these kinds of attacks really since World War II, right? What would happen if we were to enter a new world war? We had this new kind of attack, right? Attacks against Bitcoin are done on computers with code. Attacks against the dollar are done with standing armies and tanks and nuclear warheads, right? As a concept, if the US government came out and said, there's been a new auditing system, and we're going to reform our good growth stock mutual funds. We're going to reform Dave Ramsey stocks. We're going to reform these things, and we're going to verify every single share that every single CEO is producing to reduce corruption and fraud, right? We're going to upgrade the security of the stock market, right? Then Dave Ramsey would immediately pivot to that new stock market, to that immediate new growth stock mutual fund. He would not be sitting here listening to little Luke Broyles on this video saying, yeah, but Dave, the new stock market has a shorter track record, and it's only been in existence for a week, whereas the normal Dow Jones has been in existence for 100 years. Why are you gambling your money? This is inherently speculation. That's not a very accurate thing for me to do. That would be straw manning the other position, right? It's like, well, obviously you upgrade to the new thing, because even though the track record is shorter, the track record of it being a more secure thing is already longer than the track record of the previous one. If again, if for whatever reason we thought that the NASDAQ, the Dow Jones, and these mutual funds had rampant fraud and corruption, and we upgraded immediately, sure, the total track record is shorter, but the track record of it being more stable is significantly longer, and therefore, obviously, you would pivot from the old one to the new one, right? Bitcoin is the same kind of concept. Likewise, if you lived during the American Civil War, and both the Union and the Confederacy created new currencies, but the Union did one day later than the Confederacy, you would not say, in good faith, as a steelman argument, oh, but the Confederacy, it has a longer track record of the dollar existing, right? It has nothing to do with the track record in total. It has everything to do with the track record of it being stable. Bitcoin has been stable since the very beginning. I can audit every single transaction of every single Bitcoin user and every single Bitcoin wallet and every single moment of Bitcoin's entire history. I cannot do this with the American political currency system. I cannot do this with a dollar system. And that's why, in general, over time, Bitcoin trends up indefinitely in terms of dollars, and dollars trend down indefinitely in terms of Bitcoin. Because even though Bitcoin is a much shorter asset class in existence than the political currency system, right, which is multi-hundred years old, right? Even though Bitcoin is a lot shorter, it has a much longer track record of having that security. In fact, as a fun fact, Bitcoin is already older in terms of the US stock market in terms of trading hours. Okay? You understand that the US stock market is only open from 9:30 to 4 or whatever every single day, 5 days a week, putting holidays and vacations aside, right? Bitcoin, in terms of the numbers of hours it is traded in a free open market, has been longer already than the US stock market, right? Every single week that Bitcoin exists, it is gaining 4 US market open hours, weeks worth, right? Every single week, the US stock market is getting whatever, maybe 2 days of trading, right? Bitcoin is getting more, right? So sure, you can say, because you're looking at objective, in reality, real time, you can say that Bitcoin's not has long of a trading history, but in terms of open market hours, it actually already has had a longer history than the US stock market. I've made my point. Again, please subscribe if you want to, watch more videos like these. Thank you for your time. I need to drink some water, and let's watch the next clip from Dave's discussion here.
Chart the volatility of Bitcoin and then smile at me with a serious face and tell me this is a solid investment, and I'll tell you you're smoking crack.
Okay, Dave, tell me I'm smoking crack. Okay, this chart we're looking on here is charting the Bitcoin price volatility since Bitcoin's very inception, and that is in your favor, Dave, because the farther back in Bitcoin's history we go, the more volatile it is. Why? Because Bitcoin is reducing volatility over time in terms of the dollars. Oh, that's an inconvenient fact. But for the sake of, giving you every advantage, I will chart the price of Bitcoin volatility in logarithmic scale to make sure we capture all the volatility. On the left end of this chart here, you see the price of $1 in terms of Bitcoin. On the right side, you see the price of 1 Bitcoin in terms of dollars. Now, if you look really closely here, you might notice a trend. You might see that the dollar is trending down with volatility in terms of Bitcoin, and that Bitcoin with volatility is trending up in terms of dollars. Again, Dave, and everyone that happens to agree with Dave Ramsey, your main concern here should not be the volatility of one thing priced in terms of another thing. Your main concern should be the volatility of the system itself. It is not fair to say that the Bolivar is a better investment than it is not fair to say the Venezuelan Bolivar is a better political currency because it's less volatile when you're living in Venezuela, right? If you're living in Venezuela and you're pricing your world in bolivars and you're looking at the dollar, what you would see is that the dollar is trending up forever in terms of the bolivar, and the bolivar is stable. It's not accurate. It's a straw man argument to say, the dollar needs to decrease in volatility for me to view it as safe. It's it's nothing to do with the volatility of the exchange rate. It has everything to do with the volatility of the engineering system. And Bitcoin is a less volatile engineering system than the dollar. You might think I'm smoking crack, but Bitcoin's grown 8 orders of magnitude in a decade and a half. You might disagree with me. You might think I'm smoking crack, but this is the chart on a log scale. I'm pretty happy with that volatility. And I'm going to be happy more in the future. And yes, the volatility of Bitcoin is diminishing in terms of dollars because Bitcoin is growing as an asset class, because it's being revalued as a better engineering system on the world stage. But guess what? That volatility diminishing will not continue forever, and eventually it will get more volatile in the future. Why? Because the increasing amount of new volatility to the American political currency system will eventually eclipse the volatility of Bitcoin eating a global share of the market. When Bitcoin is a much larger share of the world because the world views it as a superior engineering system than the respective political currency networks, then eventually the increased volatility, the increased instability, and the increased unpredictability of the dollar will eclipse the perceived predictability of Bitcoin. And eventually, volatility will return. And Dave, this is a really big problem, because then your arguments go against you. And now, in this far future, the dollar is more volatile than Bitcoin, right? The prices of goods and services on any annual basis might fluctuate 5, 10, 15% in terms of Bitcoin. They might fluctuate 30% in terms of dollars. That's a really big problem if you're only looking at this from a 5,000 foot view, or in your case, 35,000 foot view, and you're not actually seeing what's going on here. You have to open the hood and look at what's happening. But even on your preconceived notion of just keeping the hood closed and looking at it from afar, you're still wrong. Because if you look at it in log scale, you see a very clear trend. And the same thing is true with the Dow Jones. The same thing is true with the S&P 500. And the same thing is true with those precious good growth stock mutual funds. If you zoom out and you click to log scale, you see a chart very similar to this. Why? It's because superior engineering systems trend up forever in terms of inferior engineering systems. So maybe I'm smoking crack. Or maybe I've just opened the hood when the rest of the world is so complacent with the car they're driving that they don't actually see what's going on.
So when it stabilizes, I think it will. I think it's here to stay, and I think it'll be a legitimate form of transferring goods and services. Okay, at some point, I think it's here to stay. I think it's not a bad concept.
Okay, Dave, I appreciate that. You don't think that Bitcoin's a bad concept? Great, fabulous. Why? Why? Emphasize and explain why. The reason I ask you that is because your quote is here saying it's here to stay and it's not a bad concept. Why, Dave, is it not a bad concept? Can you even articulate it to me? Steel-man the argument to me. You haven't, right? And sure, you can say a positive thing about, oh, you think it's a good idea, but you still haven't steel-man the argument. And I think if you did steel-man the argument of why you think it's not a bad concept, you will understand the circular reasoning of the things that you've said previously here to clip, right? Why do you think Bitcoin is here to stay? After all, it has a short-term track record. After all, it's pretty volatile, right? What reason do you have to think it's going to survive in the future? If you're looking at something from the 35,000 foot view and you see it's volatile and you're looking at a short-term track record, what basis do you have to even make the statement that you think it's a good concept, or at least it's not a bad concept, right? If you're only looking at the surface of the car saying, oh, well, this car is a scam or this car is a speculation because I've not looked at the hood, but you can just see it's not been here very long, but I think it's a good concept. How do you know? You haven't even opened the hood, right? And if you did open the hood, you'd be attacking it from the first principles and not from the 35,000 foot view, right? So here's my view. Let me summarize it, right? The reason Bitcoin is here to stay and the reason it is not a bad concept are the same. What is Bitcoin? Investment, speculation. What the heck is it? Bitcoin is a digital commodity that cannot be censored, manipulated, or diluted by human beings nor AI. That is why Bitcoin is really important. I know you've been watching this video for almost an hour already. Thank you, by the way. But that is why it is so critical for everybody, in particular long-term investors, in particular parents of young children, in particular the children themselves, in particular Christians. This is critical for you to understand why Bitcoin is so important. We are entering an era of the future that we are not ready for. We have less in common with the near future, my dear friends, than we have with the ancient past. The same thing is true with the internet. You can look at the track record of the internet over the last 20 years and say that, oh, things are going to continue as they have been. That's not the case. You can look at the track record, but actually open the hood. What's happening here is that information on the internet is going to be more and more and more difficult to verify as being real. You can't say, oh, AI automation and robotics are not coming because there's been a long-term track record of the internet, right? You can't look at the 35,000 foot view. You got to touch the thing and see what's going on. And if you were looking, you would see automation is coming, AI is coming. It's going to get really difficult to see what information on the internet is true or is not true. And the only information on the internet you'll be able to verify that is true is information that cryptographically you can prove had an energy cost in producing it, right? All kinds of video content, audio content, the phone calls to your family members, the texts that you read, the emails that you see, you won't be able to know if a human wrote that or an AI wrote that or a human using an AI created that information. That's why Bitcoin is critical. Bitcoin is a commodity. When you buy an amount of Bitcoin, you're buying the end token that was created as a result of computers spending electricity, randomly guessing, flipping bits via moving electrons, right? They moved electrons, they moved mass to flip bits with large inputs to get a certain output. When you own Bitcoin, you own a share of a network that basically says, hey, We value information that's created as a proof of effort, as a proof of electricity, not as a proof of authority. And this is why stocks are in very real trouble. This is why bank accounts are in trouble. This is why political currency is in trouble. Political currency is an authority-based system with the U.S. government at the pinnacle of verifying which dollar is and is not a dollar, right? The same thing is true with the stock market. Who's to say if the stocks you own are actually real, if AI can just produce more stocks? And why would AI use your precious little stocks when human beings can dilute or change the total share of, or total quantity of stocks in existence, right? Bitcoin is the most durable digital number in the world because it's the digital number that has had an electric cost in producing it. And because it is durable, despite it being digital, I know that sounds crazy, but it's more durable. In the same way that the dollar is more durable than the Turkish currency, even though they're all just numbers made up, right? They're all numbers. It's all made up. All of it. Dollars, Chinese currency, Turkish currency, Venezuelan currency. It's all made up. But the thing that makes the dollar more real, the thing that makes the dollar go up forever in terms of all the other currencies, is that it has an electrical cost in producing the dollars. Meaning, you have to spend electricity, you got to burn oil to take over the American government to print more dollars, or to have the right to dilute and print more dollars, right? The reason why the American stock market is worth more, the reason why a share of Apple is worth more than me writing or drawing an apple on a sticky note, the reason why it's worth more is that there's an energy cost tied to the arbitrary number of shares of that company. And Bitcoin, you're buying an arbitrary number that is the inherent bearer asset result, the commodity of a network that spends electricity to produce those numbers. And this network, because of its setup, because of its cryptographic security, and because of its proof of work system, is the only digital information that AIs will not be able to produce more of. And so the reason why, Dave, Bitcoin is not a bad concept is because Bitcoin is the most durable piece of information on the internet known to mankind. So durable that we do not know how to kill it, and so durable that it is the only information on the internet. We do not know how AI would ever be able to distort or manipulate or destroy it, right? That's why it is not a bad concept. And that very reason is exactly why Bitcoin is going up forever in terms of political currency, and it's also going up forever in terms of stocks. People 50 years from now will not be saving their purchasing power in good growth stock mutual funds. They'll be saving in Bitcoin. The worst concept in the universe is a political currency you can dilute and debase into nothingness. The best concept is a number that you can't make any more of. That is Bitcoin. Everything else is in the middle, right? And stocks have more in common with the dollar than they do with Bitcoin. This is why it's critical everybody, in particular Christians, in particular people with a long-term worldview, and in particular people that have kids, understand Bitcoin. If you don't start saving in Bitcoin now, it's going to be really difficult to in the future because you'll be competing with all the other people in the world and all the AIs and all the software and all the automation. It's all coming. Think of Bitcoin like a country, right? And right now it's a very tiny country. Right now it's a very loud country where you have passionate kids on YouTube making videos rambling into the void, begging you to like and subscribe because they're running out of breath. But in the future, it's all going to change. Think of AI or AIs like digital economic actors in this digital country, right? You are an immigrant to this country of Bitcoin, my friend, and you can either immigrate right now when there's a couple million people kind of dipping their toes in this land rush, or you can wait, and you can wait, and you can listen to Dave, and you can listen to all these people. You can sit on the Titanic, whining and complaining about how the lifespan of the lifeboat is shorter than the lifespan of the Titanic so far. You can sit there and complain and say, well, the Titanic is sinking at a slower rate than those little lifeboats are going up and down the waves of the ocean. That's really volatile. That's really risky. You can look at the 35,000 foot view and not open the hood, but you're making a grave mistake, my friends. You are not immigrating to the country. You are going to eventually immigrate too, but you're competing with everybody. You are in a country, right? You are somebody living in Europe in 1938, and I'm telling you, a war is coming to Europe. You gotta leave, you gotta get out, you gotta go to America. I don't like being this pessimistic, but it's true. Why? Because the world you are currently in is going to get more competitive, more zero-sum thinking, and more violent As everything becomes demonetized and people begin to fight over what remains as they desperately claw and try to figure out how they can monetize their labor in the very end times of their economic viability. We are all horses, my friend, and we have the ability to transition into an economy of automobiles. But if you don't, right now, you're going to be competing with all the other horses as they all also compete, trying to get in on the automobile. This is where it's going. What is going to be the most valuable thing in the world in 20, 30, 40, 50 years? It is going to be the thing we don't know how to produce more of. We know how to make more houses. We know how to get from more gold. We know how to mine for more uranium or more tin or more whatever, right? We know how to make more stocks, right? We can try to secure it. We can try to do all these things. But the one thing that is going to be the most valuable thing in the future is the thing that no human or no software or no AI can produce more of. And that thing, if you look under the hood, is Bitcoin. And so if you look at the 35,000 foot view and you ignore Bitcoin, you're paying a massive, tremendous cost. It's very frustrating for me to see because people like Dave are very accurate in their principles. Where am I? Where am I doing? I'm jumping too far ahead here, right? That's the point I want to make here, is that Bitcoin is a very durable concept that will stay. We don't know how to kill it. There's already been millions of attacks. There will be trillions of attacks, right? We have less in common with the future and the past. For every attack that's ever happened to the Bitcoin network, there are 10 in front of us. But they'll all fail because when you look at underlying the hood, you see that they will fail because of the understanding of the system. And any attack that would succeed against Bitcoin, I can tell you, will succeed against the dollar. Sure, a torpedo or a torpedo could blow up your lifeboat. It's also going to blow up the Titanic. The one difference is that the Titanic is already sinking. So for goodness sakes, understand what I'm saying. This is why Bitcoin is lower risk than the stock market. I know that sounds crazy. I know that sounds insane. But when you understand where technology is going, we understand where the hyperabundance of the future is going, you don't want to own shares in the AI company that's producing the AIs because the AIs themselves will demonetize that very company. You want to own a share in the future global electric grid. And the only way to do that is to own a tokenized unit of an output that the electrical grid spent. That is Bitcoin. And that is why it's not a bad concept. I don't think Dave could articulate that. It's not because he's dumb. It's just I don't think he's put in the work. I don't think he's put in the effort. Now, Dave had a couple other things I thought were really interesting to hear. But before we get to that, this is why you got to get off the exchanges. If you're somebody that's still watching this video over an hour into this, thank you. Please subscribe. If you haven't subscribed and you're still watching, I don't know what you're doing. Be consistent here, right? Please subscribe. Promote this to the YouTube AI algorithms. But if you have Bitcoin on exchanges, get out of the exchanges. I don't think you understand the risk you're in. You are sitting on exchanges, your Bitcoin's sitting there. All it takes is some scammer using some software or using some malware to figure out your login information for your exchange to drain your account, okay? For every dollar of Bitcoin I see lost in self-custody, I see at least $10 lost on exchanges. It is by far the most common way for it to happen, okay? People lose $1,000, $10,000. I've seen people literally lose millions of dollars from having their Bitcoin sitting on exchanges. If you're somebody that is scared about going to self-custody, I don't care if you have 100 Bitcoin, I don't care if you have a tenth of a Bitcoin, reach out, book a call, text me, my calendar info is down below, my phone number is down below, my email is down below. You have no excuse. I am doing this. I am being this over. I'm making these videos. I'm sharing all my contact information, even though I can barely keep up. I'm doing all this because I care about you and I care about my conscience and peace of mind. Just like how Dave Ramsey talks about his Financial Peace University, I care about my peace as well when I go to sleep at night. And I have these conversations on a weekly basis of people that have lost money in an exchange. And you know what? While some of them cry, while some of them lament their decisions of their procrastination, their ignorance, none of them can tell me that I didn't warn them, because here I am trying to warn you. If you have your Bitcoin on exchanges and you're too scared to get off the exchanges because you're scared somebody's going to steal it, I'm telling you, the risk of somebody stealing it when it's on an exchange are way, 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 way higher, and you're not being intellectually consistent. You have a higher risk of the funds being stolen, plus a counterparty risk, plus all the other risks associated with that. Bitcoin on exchanges is the easiest Bitcoin to steal online. It's the easiest Bitcoin to steal in person, and it's the biggest marker for theft because it's the easiest Bitcoin to find, and it's the kind of risk most people forget. So for those four reasons combined together, Bitcoin sitting on exchanges is the highest risk Bitcoin there is. So for goodness sakes, if you're sitting on Coinbase or Kraken or Gemini or wherever the heck you are, get out of there. And if you haven't done it yet, be honest with yourself. You're not going to. Okay, so many times I've had conversations with people saying, oh, Luke, I saw your video and you remind me to get off exchanges. That's great. Can we book a call to talk about it? I say, sure, let's do it. And then they don't do it. And then a year later, I hear from them and they lost all their Bitcoin or half of it or a tenth of it, whatever the case. Point is, get off the exchanges. The AIs are coming. And if you want to hear the bullish perspective, why Bitcoin's going to $1 million, oh, the AIs are coming and it's going to be hyper competition for Bitcoin. Yay, number go up. You got to deal with the reality that you don't get all the AIs working to make Bitcoin number go up pump without all the trade-offs. Like, do you understand that in the same way that for every attack for Bitcoin that's happened in its history, there's going to be 1,000 attacks more in the future? Like, the majority of dollars are in the future, not the present. The majority of attacks against Bitcoin are in the future, not the present. The majority of attacks against you and your Bitcoin sitting on exchanges are in the future. You haven't made it this far because you're a genius. You've made it this far because you've gotten really lucky. And frankly, you don't have enough Bitcoin to be enough of a target for these kinds of people. When your Bitcoin number goes up, they will come after you and they will take your Bitcoin if you do not properly secure it. So reach out, book a call, secure it. I've made my point. Let's get back to Dave's comments here.
It's not an investment for sure, and it's not a stable currency for sure. So, no, I haven't got soft on it at all. I've actually gotten better at trashing it.
I mean, the longer it's been around, and I feel like your stance since the beginning has been this way. So I don't think you've changed your stance.
Yeah, when I had the same stance when people were putting their money in Beanie Babies, too. I actually had people call this show back in the day that had put their kids' college money in Beanie Babies.
How do you, they just took the money, bought Beanie Babies.
Beanie Babies were quite the rage.
And thinking, well, it'll go up in value.
You couldn't get the Princess Di Beanie Baby.
Oh, that's right.
And it's on eBay right now for $10,000. But it's never sold for $10,000.
But it's listed for $10,000.
My dog came through the house the other day with one of them in its mouth, but none of them have ever produced any value. So it was a fad. It was a thing. Everybody got wild about it. Cabbage Patch Kids, whatever you want to go to next. Xboxes, whatever.
Pokemon
what are you
cards
people going
now.
to line up at Walmart for next year at Christmas, right? And so that's what we're dealing with. That's the thing. So
you're hoping the next person is willing to pay more than I paid. That's not an investment.
That's a commodity. That's a commodity. And it's the commodities go up or down based on shortage or oversupply. And shortage or oversupply is caused by greed or fear. So what you're doing is you have too many people chasing too few goods, drives the price up. Basic supply-demand curve from 7th grade econ.
It's a basic supply curve from 7th grade econ, right? Like, okay, yeah, sure, Dave, what you're saying is technically true, and on the face it is true, but the implications you're making here just are not true. So again, let me talk about what I agree with and then what I disagree with and what I would add. What I agree with, your statement, Bitcoin is not an investment for sure, and it's not a stable currency for sure. Yeah. Absolutely. Yeah. Bitcoin is not an investment for sure. Of course, if your expectation is getting more dollars as a result, right? I don't buy Bitcoin to get more dollars. I buy Bitcoin because I want the Bitcoin, right? And sure, I fully agree with you, Dave. Bitcoin is not a stable currency in terms of the US dollar. But again, the assumption or the implication you're giving here is that that's a bad thing. It's like, no, that's actually a good thing. You don't buy stocks because you want stability in terms of US dollars. You want to buy stocks because they're not stable in US dollars. They trend up over time, right? So again, I agree with you on the surface, but you're missing some of the implications here. So yes, Bitcoin is not an investment. However, Bitcoin is not stable in terms of US dollars. Again, however, to be fair, the US dollar is, the US dollar is, man, I need to slow down here. The US dollar is not stable in terms of Bitcoin, right? That's the chart I was going to pull up here, right? If you're looking here, sure, you could say that, there's not a one-to-one peg between Bitcoin and the dollar. Sure, but that's not a bad thing, right? And this, all the pros, I could take this quote out of context, and say this is a bad thing. All the good growth stock mutual funds are not a stable currency. That means they're worthless. It's like, no, they obviously have worth, right? You wouldn't say this about water. You wouldn't say this about your car. You wouldn't say this about stocks. That doesn't mean that those don't have value, right? And you can't say it about Bitcoin, a digital commodity, and say that it's inherently without value, right? That is, unless you compare the volatility in currency issuance, in which case Bitcoin is more stable than the US dollar. People have been predicting Bitcoin's supply next year consistently for a decade and a half. Nobody's predicted that for the dollar. And so from that perspective, Bitcoin already has a longer track record than the US dollar. Other things I agree with Dave on. Bitcoin is a commodity. Correct. Abso-freaking-lutely. That is, yes, absolutely. Thank you. Fully agree. Most people in crypto do not understand this, yet Dave Ramsey does, right? Dave Ramsey, the guy that lots of people in digital assets and crypto make fun of, right? Dave Ramsey, as much as I've been talking for over an hour now about mostly the things I disagree with, big props to Dave, and that's why I'm making this video. Dave gets Bitcoin more than most people that own Bitcoin understand Bitcoin, right? Most people that buy these currencies don't understand what they own, right? XRP is not a commodity. FTX token was and is not a commodity. Binance token is not a commodity. These are not commodities, right? All these things can be produced by more people, by more companies, by more government entities, or by AIs, right? You don't want to own those kinds of things because in some cases, like FTX, cough, cough, they're a Ponzi scheme. In other cases, like XRP, they are, an anti-Bitcoin propaganda campaign that use your liquidity to fund campaigns that make you feel bad about being poor. and Binance coin, likewise the same thing, right? You can sue or you can go after these kinds of things, right? All three of these things have had legal trouble. Why? Because they're all unregistered securities. None of them are commodity. None of them have an electrical cost in producing like Bitcoin. So ironically, Dave is correct in that he is implying here Bitcoin itself is the thing that is a commodity, right? So as much as I disagree with Dave with certain things, I think that while he maybe wouldn't verbalize it or articulate it like how I'm doing right now, I think he actually gets it more than you would think, or at least how most people would think. Let's talk about the things I disagree on, because ultimately that's why most of you are here. Disagree. You're hoping somebody else is willing to pay more. Yes, that is a commodity. Well, yeah, okay, this part's correct. You're hoping somebody else is willing to pay more. Well, yeah, that's correct, but that's not the definition of a commodity, right? To put these two things together is misleading. Sure, all commodities have their prices go up or down based upon supply and demand. Yes, it's 7th grade econ. Yes, we all know that. But you're implying that that's not true for everything else. It is true for everything else, right? Stocks prove this. You're a big stock market bull. You're a big real estate investor, right? One buys stocks with the understanding another is willing to pay more later. Again, you don't identify something as an investment or a speculation based upon the asset itself, but upon the actions that the person is taking. Likewise, you don't say something is or is not a commodity based upon is somebody willing to pay more or less for it, right? It's like that's true for all stock or all assets. It's also true for speculation or investment, by the way, right? Both the investors and the speculators want the thing they're buying to be worth more in the future than the present. So why is this a bad thing like you're implying, right? Again, go to your favorite AI assistant or search engine and it will discuss this, right? Equities and commodities are two distinct asset classes investors use for different purposes. Equities own or represent ownership in companies, right? Like XRP, like FTX, or like BNB, if you want all the downside of an equity without all the upside of having a legal ownership of the company, right? And commodities are different. So I don't understand why Dave is saying, oh, well, Bitcoin is, too volatile and it's not proven and blah, blah, blah. And Bitcoin's a speculation because you know that Bitcoin goes up and down based upon only buyers and sellers. That's basically 7th grade econ. Ha, 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 ha. Well, what are you talking about? Of course. That's how Bitcoin works. That's how everything works, right? That's how all of it works, right? Commodities go up or down based upon a supply-demand curve. That's what he was quoted as saying. But again, that's misleading. You're saying that Bitcoin equals not good because Bitcoin equals price volatility, and price volatility equals a bet that somebody's going to be paying more in the future than they are now, and that equals bad, and blah, blah, blah. Well, it's like the same thing is true with your stocks. It's just a different asset class and a longer-term time horizon, or at least in your perspective it is. You're holding stocks for the next 50 years. I'm holding Bitcoin for the next 300 years. My time horizon is longer than your time horizon. So literally everything, I could take these quotes and flip it around and say equities. Oh, well, the U.S. stock market is a speculation because the stocks go up and down based on supply and demand. That's just basic 7th grade econ. That's what an equity is. An equity is something that goes up or down based upon supply and demand. It's like, well, no, that's everything. When there's more supply of dollars than there are goods, you have inflation. The value of the dollar goes down, right? Is a political currency a commodity? No. And yet everybody knows that's true. And that's why so many people are watching these videos, is because inflation has stolen people's purchasing power. One other thing Dave has said that I think is really interesting. Beanie Babies are the same as Bitcoin. That's a quote he said. I disagree, Dave. Yes, I agree that they are both commodities. Beanie Babies are a commodity. They are something that you produce. You're not buying an equity. You're not buying a political currency. It is a commodity. A moderately cute, slightly fluffy commodity, right? Bitcoin is also a commodity, much less cute and infinitely less fluffy commodity, right? Sure, they're the same in that they're commodities, but your implication is that they're the same worthwhile commodities to invest in, right? It's like saying, oh, well, water is useless because water is a commodity and Beanie Babies are also a commodity, and so therefore water is just as valuable as a Beanie Baby. It's like, well, no, yes, they're both commodities, for goodness sakes, but they have totally different values, right? I'm not going to die after 3 days if I don't get my daily dose of Beanie Babies, right? There is a major difference here. All commodities are in a spectrum from the easiest to produce to the most difficult to produce. And Bitcoin is on the far end of that spectrum. Eventually, Bitcoin blows out to infinity, and there will never be more than 21 million Bitcoin. If you open the hood of this car and you actually look at it, you'll see what I'm talking about. But for now, take my word for it and understand that this is the spectrum. On one end, it's really easy to make more Beanie Babies. A little further over on the spectrum, it's a bit more difficult to make water. It's a bit more difficult, right? People die of thirst every year. Nobody dies because they lack Beanie Babies, but people die because they don't have enough oil, real estate, or water, right? Some commodities are more difficult than others to produce. And Bitcoin, on the very far end of the spectrum, is something with no utility value, right? It doesn't have any of the comfort or fun of a Beanie Baby. It doesn't have any of the survival benefits of water, but even though it doesn't have that utility value, which is one of people's main criticism, you can't deny, if you actually look under the hood, that Bitcoin's the most difficult thing in the world to produce, right? We will not be able to produce more than 21 million Bitcoin. Therefore, your statement, Dave, is correct that these things are both commodities. But again, you're saying a truism to make a judgment call, but they're totally unrelated. You can't make a judgment call on Beanie Babies and water just because they're both commodities. You got to take a step back and ask yourself, what is the thing with the least utility value, and what is the thing with the most difficulty to reproduce? Well, Bitcoin. And so therefore, the thing that's going to be the most difficult for AIs to produce, while also having the side benefit of not killing everybody in the process, it's Bitcoin. And so Bitcoin has some value, right? So anyway, we got one more clip here, Dave's final clip.
What we're trying to do, honestly, is we're trying to teach you to talk about it differently so you realize what it is. To quit saying it's an investment, start calling it speculation. And if you're going to speculate on anything, it needs to be with fun money, because that means you're gambling. If you're day trading in stocks, what's the percentage of people make money in day trading in stocks?
Very few. A few percentage points.
Like 2?
Yeah. I think over 100 days, only 3% actually come out any further ahead. Yeah.
Profitable.
97% lose money if they keep it up for 100 days or more.
That's actual research, not TikTok. Okay? So, if you're getting your financial advice from TikTok, you got a problem.
That's actual research, not TikTok. Well, I agree. Getting advice from TikTok is not a good idea. I also agree with Dave that day trading is a horrible idea. However, again, I disagree. Again, speculation is not determined on the asset you are buying or selling, but upon the mindset and actions that you have around that asset, right? Dave is conflating speculation with day trading, or speculation via day trading, with investing in an asset as a long term. I do not advocate for day trading Bitcoin. I do not advocate for day trading the stock market. However, if we're saving money for the next 50 years or 100 years, I highly advocate for saving in Bitcoin instead of the stock market. Why? Because most of the companies you're buying on the stock market, you're pricing at 20 to 100 years of future earnings. Bitcoin, you don't have to price in future earnings, and we can see that if the digital world continues in the current direction it's going, that eventually the one digital commodity in the world that you can't reproduce more of is going to be the most valuable thing, because electricity is going to be the base layer utility commodity of the world, right? Water is to humans what electricity is to AIs, and so you need a way to own a share of the global electric grid, and a much better way than owning an equity of a company that's being demonetized and producing more electricity. The better way is to own a share of the Bitcoin network, because it is absorbing a larger and larger share of the electric grid. Dave is very wise to point out the ways in which people use terms interchangeably that is to their detriment, that are resulting in poor characterizations. People make grave mistakes when they say that I'm investing in Bitcoin and they're day trading it. You're not investing in Bitcoin because, number one, Bitcoin is not an investment. Number two, you don't understand what investment is. Number three, you're day trading. That's not an investment at all, right? In at least 3 different ways you're making mistakes. So Dave is correct. He concludes his little speech here about how Ultimately, what he's trying to do is help people redefine their terms. Yes, likewise, Dave, which is why it's very frustrating to see you making the exact same problem, albeit in a slightly different way. If you're, Dave is saying buying Bitcoin is different than buying stocks because this asset is inherently speculating. But then he concludes his very talk about talking about stock trading, right? He talks about the quote unquote real research, not TikTok, and saying, we're trying to get people to understand that day trading is not a good idea. They give an example of day trading, aka speculating in stocks. But Dave, you started out this conversation saying that Bitcoin is essentially inherently speculation and stocks is you started by defining speculation versus investment as an asset-based thing, when in reality it's an action-based thing. You start saying one thing, you end with an entirely different frame of view, right? So yes, obviously investing and speculating are action-based, not asset-based. You conclude your entire argument defaulting to talking about speculating in stocks, right? You're saying speculating in stocks is a bad idea, therefore speculating in Bitcoin is a bad idea. Obviously, I agree. But you shouldn't be speculating in Bitcoin. You should be saving Bitcoin for the long term. Not as an investment, because you're not trying to get more dollars out of it, but as a long-term form of savings, because you want to save your energy in commodities that are worth more in the future, trending up over time, yes, with volatility, but it's trending in one direction, people, right? Is speculating versus investing a matter of which asset you choose or depending on your actions? You can't have it both ways, Dave. Yet that is exactly what is being done here. So, in conclusion, thank you for watching this far into the video. If you've enjoyed this conversation, please book a call with me. I'm more than happy to talk all things Bitcoin treasury companies, all things securing your Bitcoin, helping you gain peace of mind, helping you increase your Bitcoin stack. I have a track record of helping people increase their Bitcoin stack on average about 70% more in the first 12 months. I have clients with hundreds of Bitcoin. I have clients with a tenth of a Bitcoin, right? Obviously, a lot of them are in between somewhere. So if you're new to Bitcoin, if you're experienced in Bitcoin, I don't care if you've been in Bitcoin since 2010 or 2011. Some of my clients have been in Bitcoin since that long ago. Others literally are getting their first Satoshis at all, right? Brand new to Bitcoin. I don't care your experience level. I don't care what country you're from. Feel free to book a call with me. More than happy to have a conversation. Obviously, it's not free to talk to me. However, if you don't have the means or the interest to talk to me with a paid call, you can still message me and we can get you set up with a free consultation, a free discovery call to help you figure out how to end up with more Bitcoin and, just as importantly, more peace of mind. So if you watch this far in the video, clearly you enjoy my content. Thank you for subscribing and take the next step, book a call. Obviously, you think I have some value in the things I say, so would love to continue delivering that to you on a one-on-one conversation instead of a mass media discussion like this. So let's quickly conclude here. Dave, what do I agree with you on? I agree. Debt is a bad idea. I agree with that. I'm saying that as somebody that has a lot of debt, but debt-based systems are a bad idea. Political currency is a debt-based system. We agree debt is a bad idea, but we disagree on our conclusions of why that's the case. Things we agree on. People should not be putting large sums of wealth into things they don't understand. Yes, I agree. People should not be speculating or gambling. Yes, I agree. In fact, I would define myself as speculating or gambling less than your own daughter, right? Like you said, your own daughter, Rachel, goes to the craps table sometimes in Las Vegas. I don't even do that, right? So yes, I agree. People should not be speculating or gambling. You might define Bitcoin as a speculation because you're looking at Bitcoin as volatility in terms of the US dollar. However, that is not a fair comparison. Things we agree on, Dave. Owning the best number representative of a share of productivity of the world is the best investment you can make. In your opinion, that is good growth stock mutual funds. You believe that is the best numerical representation of wealth in the world. I disagree. I think that's Bitcoin. Why? Because Bitcoin is more finite than the stock market, because Bitcoin is coming after the entire electric grid, not just a tiny subset of corporate equities and high valuation equities, might I add, in one single country. It's about the whole world and about denominating the entire future, including the future of AIs. There are going to be more AIs working for the productivity than human beings in the not-so-distant future, and that's really important to keep in mind. So, in principle, we agree on the same thing. You want to own a share of the future. You don't want to own the commodities. You don't want to own iPhones. You want to own shares of the company producing iPhones, right? Those are things we agree on. Things we disagree on. That this commodity called Bitcoin makes or doesn't make sense, depending on your frame of view, right? That's obviously one thing we disagree on. The other thing we disagree on, the only reason you need to own stocks as an investment at all is to get more currency, because the currency itself is not a good form of savings, right? Therefore, people have to gamble, they have to speculate, they have to invest in the long term in the stock market. And a lot of the fiat mindset, a lot of the short-term speculation, gambling, degenerate mindset you're fighting against, Dave, are the very kinds of mindsets subsidized and monetized by a political currency that is dying. The dollar is dying. Everything is trending up in terms of dollars because dollars are trending down in terms of everything else. And so, the only reason you don't like Bitcoin is because you like stocks more, because they're more volatile than the dollar, but not so volatile that it makes you freak out at night, right? But the whole reason people are investing in stocks in the first place is because they need to save in a currency other than America's political currency. They need to save in something with a more stable and longer track record of having a predictable issuance rate. That is the stock market, not dollars. It's not about the volatility of the price. It's about the volatility of the system itself. And if you actually follow that intellectual thought exercise to its conclusion, you would realize that Bitcoin is an even more secure form of savings than the stock market. So the final thing I would add here is that there's a moral case for Bitcoin, just like I talked about Confederate money. When you are buying Confederate money during the height of the Confederate regime in the 1860s, you are subsidizing slavery. That's the hot take. And if you are owning shares of the American political currency system, if you're owning shares in the American stock market, you are subsidizing all the things that those companies do. If you own shares in Lockheed Martin, you are subsidizing and funding the war machine of the U.S. government. If you're owning American bonds, if you're owning American political currency, you're doing the same thing. Now, sure, not every war, not every bullet that's fired from an American gun is inherently evil, but a lot of it is not good. A lot of it is bad. And that's why Bitcoin is better. Bitcoin is secure, more secure, and it's more secure with a lower human cost. You want to talk about track records of volatility, Bitcoin has a longer track record of not needing people to die to keep the system surviving. So not only, like this hour-and-a-half long video, is it about the financial reasons or the paper reasons, it's also about the human reasons. And as a Christian, I not only am into Bitcoin to the degree I am because of my passion for the financial benefits from this network, but because of the human cost. I can't stand it with political currency. It disgusts me. So, 5 call to actions for Dave Ramsey and his fans. First of all, if investing or speculation is dependent on the asset and not the action, define it for me, please. Define which people pay more later assets are worthwhile and which ones are not without falling into the intrinsic value fallacy. If you actually follow what you're saying to its conclusion, you end up with this intrinsic value baloney, which makes no sense. You can't eat an apple stock, but you can eat actual apples. It doesn't mean that you should save your wealth in physical apples. The second thing I would encourage you to do, define stability. What do you mean when you say Bitcoin's not stable? Define stability. In terms of what? Where? Right? If you follow it to a conclusion, again, you will realize what you're saying is not intellectually consistent. Why? Because literally everything has an exchange rate. And so the only thing you can compare one system with is itself. Not what is the volatility of this system in terms of a different system, because that other system might be more volatile than the system you're measuring within. So measure the system based upon its present time to its future time. That's how you measure volatility. Bitcoin is the most stable measuring stick on earth because it is the most firm unit of measurement. We can create more dollars, we can create more bolivars, we can create more yen, we can create more pesos, we can create more stocks, we can create more gold. All those things you're speculating on to some degree at the end. We can't make more Bitcoin. The third call to action. Explain why you believe Bitcoin is quote unquote here to stay and it will eventually stabilize if everything else you said you also genuinely believe. If you explain it correctly, then you'll come to the conclusion that Bitcoin is more secure as a measuring stick than the US dollar or the S&P 500, and you will also eventually realize and see that Bitcoin is more stable than the US dollar if you're pricing it day to day or year to year in terms of the system itself. Sure, if you're pricing dollars in terms of Bitcoin, it looks more volatile, but that's not a fair comparison in my opinion. If you explain why you think Bitcoin is a good idea incorrectly, then you're buying into the hype words. You're buying into the hype of the Bitcoin TikTok influencers, right? You're buying into narratives that make no sense. Actually, look at Bitcoin from a first principles perspective and articulate it, right? You're trying to live in this limbo land where you're saying it's an awful bad idea, nobody should do it because it doesn't have a track record, but also at the same time it's a good idea. Well, it being a good idea followed through to its logical conclusion negates the other criticisms you're making. It's not very logical. Like seriously, I'm asking you, try to explain what is good about it from a conceptual perspective, and you'll either find it is better as an engineering system than the US dollar, or it is not. Either way, you invalidate something of your current argument. You invalidate the idea that you need a quote-unquote longer track record to be able to see if it's a well-designed system or not. Fourth, the human cost. I mentioned this a couple moments ago. Dave, you mentioned the Confederate money, okay? What is the human cost of that? The human cost of holding Confederate political currency units are the millions of people that are enslaved in your political jurisdiction, right? What is the human cost of the US dollar? It's not zero. It's not zero, right? What is the human cost of Bitcoin? As a Christian myself, what is frustrating to me from you, Dave, or from anybody else that's following Dave, what's frustrating to me is not the monetary question. I don't care if you buy Bitcoin or not. That's your choice. It's your freedom. Ultimately, at the end of life, there are way more important things than money on your deathbed and after you die, right? Way more important things. However, because human beings are more important than money, this is my question. This is my proposition, right? It is not your lack of buying Bitcoin that frustrates me. It's your lack of interest in thinking, what if there's a way to secure global wealth that doesn't rely on funding and monetizing a political state that is leveraging a monopoly on violence to keep its monopoly on currency? Does Dave simply not understand the human cost of the US dollar, or does he simply not care? Now, I'm an optimist and I would like to assume best intentions, so I assume the former, which is alarming because he really should see the cost. Give it thought, Dave. Look at the number of people that are dying as a result of political currencies. How many people have died in Ukraine because Putin and Zelensky are using all kinds of political shenanigans to fund their wars, right? How many people died in World War I that didn't have to? How many people died in the Russian revolutions? How many people are dying today because of the inefficiencies of political currency? It's not zero. It's in the millions. I would argue the tens of millions. But even if you think I'm off by a factor of 10, it's still a million people a year. You're telling me that as a Christian, you don't care enough to actually look into this thing and study the hood on the off chance that maybe there's like a 1% or 5% or 10% shot that we can have a monetary system that doesn't rely on the death of human beings to subsidize a number that doesn't even have any utility value to people? It's disgusting. If you genuinely believe Bitcoin's a good concept, like you say, and you see the human cost of the US dollar, then you should investigate it. And if you investigate it and you actually do the work and you actually look under the hood, then you will see it's a better numerical way to quantify productivity than a good growth stock mutual fund. And you'll understand why Bitcoin's a better investment. Because it's not an investment at all, it's a form of savings. Because the entire concept of investment proves the point that the dollar is not a good form of savings, right? So I dare you, Dave Ramsey, or anyone else, or on his team, whomever else, I dare you call out folks like myself. Because there's only one or two scenarios here. Either I'm a loser kid that's in strong debt, that's about to lose all my money because I'm gambling in some online token that somebody can shut down, and I'm actively encouraging other people to be my exit liquidity and sitting on my high horse of a pedestal, proclaiming and saying this is going to be good for the world's poor, right? Either I am an actively evil person that is knowingly lying, or so deceived in my delusion that I'm being actively evil, or I'm right. There's really no middle ground here, buddy. If you're right, then I'm evil for standing on a pedestal saying we're helping the world's poor and Bitcoin's this big, wonderful thing. I am taking people's money, encouraging them to speculate and gamble and go into debt to buy Bitcoin on the high horse that, this is going to save some kids' lives in the future, right? If that's the case, then you should call me up for not being a Christian, right? For the sake of my own financial exploitation of others, right? Via encouraging people to speculate with their earnings. If I am right, if I am correct, then we could achieve great things together. And especially as fellow Christians, it's really important we help other human beings made in the image of God preserve their monetary energy in the face of all the AIs and all the software is about to automate human labor and demonetize it significantly, greatly over the next 50 years. You might think that's crazy, and I get it. But if I am not an actively evil person saying all these things, and if I actually believe what I'm saying, as somebody that's taken your course, as somebody that was buying good growth stock mutual funds, as somebody that used to agree with you, I am telling you, with strong conviction, moral conviction, financial conviction, and public conviction, I'm saying these things, putting a lot on the line. Not because I'm in some delusion, not because I'm smoking crack, as you say, but because I genuinely believe this. And it's your duty to call me out. Call me out! Or tell me why I'm wrong. Either way, you cannot afford to stay silent if you genuinely care and believe in what you say. I believe you have good intentions. I believe you're doing the best you can. And I believe your advice generally is good for people, right? But in this case, this is your lifeboat moment, Dave. You've been seeing people your whole career jump off and jump off and jump off the Titanic into various flimsy wooden boats in the middle of the freezing cold Atlantic Ocean. You're watching them set sail and row away into thousands of miles of endless abyss. You're watching them commit financial suicide. And I get it. I see it. 98% of the time, you're right. But in this case, you're wrong. This is a technological paradigm shift. In the same way that owning gold was demonetized by the stock market, Bitcoin is going to demonetize the stock market. AI, automation, all those things are going to accelerate this. Bitcoin is a digital nation, and it's critical that as many humans as possible enter this nation while it's still cheap to do so. Not for the sake of getting rich quick, not for the sake of some speculation, but for the sake of preserving their purchasing power in a world where they have less in common with the near future than the ancient past. That is literally all I have to say. If you watched to the very end of this video, please like and subscribe, share this video with your Dave Ramsey fanboys, and I'll see you in the next video.